Piece of me, piece of my, take some time. I'm just reading all that slow, so for sure. That's just for me and my world. Be secure for the flow. Jesus, be my God.
What is up, YouTube? Welcome back to another video. Today I'm going to be showing you a entry model. This one is a goated entry model, a goated strategy. Honestly, you could use my strategy, the TGB one, or you could use this one. Both of these are insanely good. You know, they have very high win rates. They have low RRs, but the RR will always be a profitable RR. You're not going to be a negative RR. So you're not going to be like a 1 to 0.5. You know what I mean? It's always going to be a 1 to 1.5, 1 to 1.6, 1 to 1.7. You know, it's always going to be a little bit more so that if you do lose, you're not going to be losing your whole profits, right? So remember to comment in the comment section below if you have any questions. Like, subscribe, and here we go. So this strategy is going to be called Orb. So it's called ORB, aka the opening range breakout. Okay? Opening range breakout. And with this strategy, you want to trade with the trend. Lies. You do not have to trade with the trend. You want to trade with correlating time frames. Okay? So what you do is you go onto your 15-minute chart, and then you're going to find the 9:30 candle. Okay? So it would be right here. This is your 9:30 candle right here. So once this candle closes, you're going to mark off the high and the low of this candle. So you take your line, the high, you draw one line going across. What the fuck? So you draw one line going across, and then you go to the low of the candle. And you draw going across. Okay? That is going to be your opening range. Okay, and then after you have your opening range marked off, you're gonna drop down. Let me know if I'm going too fast. So 15-minute candle, close, mark off high and low. Then now you're gonna drop to the correlating time frame. So with the 15, it would be the 1 minute time frame, the 1 minute chart. Okay? So after that, after you have your close of the 15-minute candle, you draw your high and low, and then you drop to the 1 minute chart. And then what you want to wait for is a break of the low, either the low or the high. Okay, so you see how we marked it off? You're gonna wait for one of them to break. Once one of them breaks, that gives you the indication of where the trend is going. Okay, once it breaks, you want a retest of this zone. Okay, so it could be the second candle, it could be whatever candle, as long as it retests and then re-breaks outside of the zone. Okay, so with this one, we didn't have a retest here, no retest here. It came up, retested here, right? And then it re-broke this zone. So once you break the zone, you're gonna place your thing here, and then you're gonna put your stop loss at the high, and then you're gonna target the next level. So it would be right here. And then there you go. That is Orb.
Oh, fuck.
This happens every single day. Literally every single day. This one, majority of the time, you're not trading breakaway gaps. Okay, you're going to be trading a lot of fair value gaps, like you see right here. This is a fair value gap. 1, 2, 3. Very low candle volume. It came up to retest the gap right here. See, retested the gap, and it touched into a supply zone, right? So you have two indications that it disrespected the fair value gap, but it respected the supply zone. You see what I mean? So this is a good protected high. This is a good resistance to put your levels at. So with this, you could, instead of putting your stop loss at this high, you could just look for resistance. You know, since this is a sell trade, you want to pay attention to your highs. You could put your resistance up and place your stop loss above the resistance. So like once it breaks, and you have to wait for candle closures. So this candle has to close outside of the zone. Okay? So if it closes inside this line, we're not taking the trade. It has to close outside. So like this close, that's a good close. So I would go here. Boom. A banger. It's actually a 1.8. But it's still a great trade. Sometimes, like if it has super good volume, this could fucking be disgusting. Right? Okay, so now with this strategy, you can also take advantage of fake outs. Right? So let's say it broke, but then faked out and continued up. Right? So let's say it did this. It had this break, but then it didn't fully go all the way down. Right? It retested, but it never rebroke. That means it was a fake out. Right? That's why watching for the retest is very important. You want to have a retest and then a re-break of this area. So let's say it didn't break, and it continued up and broke this level, right? Now you can take a trade here. So if it breaks this level, I would take a break of structure. I would enter on the break of structure. So I would place my stop loss here, stop loss below this low, so it would be right here, and then I would target the opposite end. My stop loss wouldn't actually be this big though, because wherever it made the shit. So wherever the low would be, that's where I would place my stop loss, right? Or you could place it at resistance, which would be right here. I mean, yeah, you would place it at support, so it'd be right here, right? So below support, let's say it broke structure, closed right here, boom. Because that would be a failed move, right? So if it failed to go high or it failed to go low, it failed to go low or it failed to go high, you take a trade going in the opposite direction. Okay? So that because it failed to go low or it failed to go high, that means that it's going to go towards either it's going to go towards the opposite end. So that's where the market is going to draw to. So if this failed to go low, it's going to shoot for the high of the day, the high of the open, of the 15-minute open. Okay? So if you were to take this trade on the break of structure, let's say you went in with 1 mini, and you would have a 1 to 2. So you would make $600 on this. Okay, so this strategy is extremely versatile. There are so many ways you can use this strategy. You can use this strategy as a support and you can use this strategy as a way to find key levels, right? And if you're an ICT trader, this could be a very good ICT trade. Because if it breaks and then fails to go down, you have an entry right here. Like if it kept going and broke structure, you know what I mean? This would be a fair value gap entry. Or this is even an inverse fair value gap entry right here. So an inverse fair value gap is a fair value gap in the opposite direction, right? So this one is a fair value gap. And if a price pushes past it and does not respect it, that would be an inverse fair value gap. So instead of retesting it and then going up, like it did right here, like retest and it went down, if it continued to go up and then it basically flipped this fair value gap right here, and then just kept going up, that would be an inverse.
Okay.
Oh, good example. No, that's not a good example. Well, this is a very shallow example of a fair value gap, but there you go. See how it flipped it and just kept going down? This is an inverse. These are very strong levels too. So like you could technically take a trade right here and place your stop above this high and target the low. But don't trade this. I'm just showing you. This is nothing, okay? Don't get confused. This was nothing. I was just bullshitting. Oh, here you go.
Okay.
Right here. So this would be the inverse. Inverse fair value gap. Bam. I enter. I would wait for this to close. Like it close outside. Boom. Stop loss below. Above. And then I would target this level. There you go. That's a beautiful trade, actually. Yeah. So that's inverses. Don't get confused though, because we're talking about orb. But there you go. You can use orb for multiple different things. Like you can put a line in the middle if you want to. So like you could use your Fibonacci instead, and then draw on the 15. So you can go.
Yeah.
You can go like this. Take your Fibonacci, draw from the 15 on the 15, high and low. Right? And this would be your range. Right? So some people they'll watch this, or if it's a failed move, they'll wait for it to touch the 50% mark, and then they'll take a sell from the 50% mark. Or a buy from the 50% mark, like, because that's the fairest value for the day. You know what I mean? So this would happen at 2 p.m. So they would get into this trade at 2 p.m. It would touch, stop loss above this 50% mark, and then target the low. You would get a 1 to 3.3. So orb can be used multiple different ways. It can be used for a just a straight up breakout, or it can be used to trade from level from low to high. It can be used to trade from mid to low, mid to high. It depends on how you want to use it. Okay, it's very versatile. But in the beginning, I say until you learn the market more, I would stick to just taking the breakout trades. So like if it breaks the level, I'll wait for a retest like this, right? Broke, retested, and I would take the re-break. So stop loss right here, and then I would target this bottom level. And that's it. That's all I would do. You could target a 1 to 2. Some people just have a fixed, they make it extremely mechanical, where no matter what, they target 1 to 2. So if it breaks, retest, and then it has another break, they enter, target 1 to 2. But me, I play it safe. I just target the next level. You know what I mean? Because this is the low, right? Because if this low is strong, it could just reject off of this level and just go up. So if you're targeting a 1 to 2, you would get fucked here, But this 1 to 2 actually paid out. You know what I mean? Very clean 1 to 2 actually. So break, came up, retested with a strong retest, then rebroke. I entered, stop loss above the break, the candle that broke out. So the candle that broke out is where you put your stop loss.
Yeah.
And then you just let it run.
Okay.
And then remember, if it fails, if it breaks structure, like right here, if it fails to go lower, I would enter a buy trade and target either the 50%, put stops to break even, and let it target the high of the day, or I would just take my re-break in, my fail break in to the 50% mark. See?
Okay.
Because that re-break in, it would have taken like the whole day, but it's still a good trade, right? Stop below this re-break, the fail break, and then maybe target this, target 50% of this movement right here, which would be like right here, actually. This
Right.
line is not
Yeah.
correct. I don't know. Yeah, but it would be right here.
Mm-hmm.
Actually, I would probably place my stop like right here. No, I would get stopped out right there. Yeah, I would use the candle. This wouldn't be a very good like RR trade though. So you also have to understand like, is it a good trade? You know what I mean? Because like this would be a negative RR trade. I probably wouldn't take this. Yeah. Anyways, there you go. That is Orb. Orb is extremely easy, same as TGB. They're both extremely easy, but Orb has more versatility, right? With TGB, you're only trading breakaway gaps. With Orb, you can trade literally anything. You can utilize it with ICT. You can utilize it with market structure. You know, you can take simple breakout trades, or you can take fail breakout trades, like fake outs to go to the real move. It's very versatile and super easy to trade. So yeah, there you go. That is Orb, everybody. Remember, 15-minute time frame. Mark off your high and your low of the close of the 15-minute candle, the 9:30 candle, and then you drop down to your 1-minute chart, and then you find your entry on the 1-minute chart. Preferably in the direction of the trend. So if it's downtrend and it's breaking to the downside, I want to see a good retest and then a break back down to take the entry. Because if it's breaking out in an uptrend to the downside, I probably won't take it. For Orb, that is, because you already missed the 15-minute, I mean the breakaway gap for market open, you know?
Yeah.
So you can't really, so you actually have to pay attention to the trend a little bit just to make sure you don't get faked out, because you're not able to take advantage of this breakaway gap on the market open. Okay, there you go. That is Orb. Thank you guys for watching. If you have any questions, leave it in the comments. We're going to be doing a standalone video on whenever you guys leave comments. And then we're going to be, yeah. So Nick and Victor are going to be starting to trade on Monday. So I would let them, I'd say like tomorrow during like Asia session of Sunday Open, just try to practice one of the strategies, you know. If you want to keep it simple as possible, I would choose one of the break strategies, because that's the easiest ones to learn. And then as you get better, you know, you can go into the liquidity supply and demand for your bigger RR, bigger risk to rewards, you know. All right. Thank you guys for watching. Remember, like, subscribe, leave a comment, and I'll see you guys in our first market open trade on Monday. All right, peace out.